Welcome to Charts This Week. My name's David Linton. I run Updata, and another really tough week on markets last week, and really just shows this chart of the Dow Jones Index how much we've just unwound. Pretty well all the gains this year. We're lower than we were at the start of the year, and we really are testing the lows that we saw in February. And in fact, Friday's close down over 3% on the Dow is the lowest close since then. Quite interesting, we've had the markets lower than the close level on Friday, but we haven't closed at that low, and the importance is really that the market just didn't recover towards the end of the session on Friday. It really just stayed near those lows, so really demonstrates inherent weakness in the market at the moment. So quite key that, and as a result, we expect stocks to keep falling whilst we're in that downtrend. Here we see the daily cloud chart of the S&P 500 index, the weekly cloud overlaid. We're just clearly below on the daily chart. This uptrend is definitely over for now, and we can fall back into this sort of a really good 100 or 150 points to find support in the weekly cloud before we'd recover again. So a lot of downside on the markets at the moment. If we look at the 60-minute chart, this is the UK market. Monday morning on the FTSE, we've had heavy falls this morning. In fact, we've got heavy falls right across the board in Europe. Not a great surprise with Friday's close in the US. And really, although we had signs of a bit of a short-term recovery, remember 60 minutes charts, we're thinking just the days ahead. It really is now falling away again. So through the cloud in May on the daily chart, this is the daily cloud, and the hourly the chart is not looking great now either. So really, it's all pretty bearish on stock markets. If we look at currencies, of course, lots of turmoil in currencies. A lot of people have been saying that the euro is probably so oversold and bottoming here, but the fact is we are through the lows. We're seeing new inherent weakness just continuing lower. This 116 level is really the sort of the previous 2005 level is really where we would expect to be back. We've clearly got 4-year lows on the euro. Will we break below 5 years and look at 6 and 7-year lows? So really, this 116 level is now pretty key. And you might recall last week we looked at this, just the nature of this chart, the fact this descending triangle pattern, that we couldn't hold this base. The trend won out, and it's now really testing to new lows again. And in fact, if we look at the 1-minute chart, we see here we've got targets of 116.70, 118. We're currently at about 119.50 this morning, so we really do see just more downward pressure. A little counter trend target of 120.90. It's not terribly exciting. It is counter trend, it is activated, so we will see bursts of buyers coming in on the euro, but the overall trend, of course, is down, and we should be really taking attention on these downside targets. You recall we said that sterling looked like a good bet versus the euro. We're seeing the breakout. We're through that 120 mark. We believe right back to the 130s is where we're going on sterling. So sterling's the stronger currency of the two at the moment. And if we look at the dollar index, a lot of people have said, it's topped out, and it's quite interesting that there is a flight to safety of the dollar, even though in the very long term, this is a very long-term chart. This is back into the 1980s. There's a point-and-figure chart of the dollar index. A 1-by-3 chart. So you don't get a lot of change in this chart. You might only get one column a year. We did have this downside target to 75 given right back in 2002. We did see the period of dollar weakness. We now have a counter trend target, so we're still in a very long-term downtrend on the dollar as a basket, but here we're seeing that 96 is possible, and we're at 88, so there's still a lot more upside potential on the dollar, and of course that implies still a lot of downside potential on the euro as well. So quite interesting. This big story this morning, of course, is Hungary. Rumours of a default. We're seeing the Hungarian forint currency really falling. So Eastern Bloc countries starting to come under some pressure, and we'll return to that when we look at some of the commodities markets. Moving on to see oil. Oil is looked a bit interesting last week. We're back in the mid-70s. It looked like it might recover, but remember, we are below this cloud, so any recovery is likely to be short-lived. We are in bearish territory on oil, and we do see downside targets if we break below the sort of mid-60s level right the way back to the low of last year at around $30. So really quite key. If we look at the 60-minute chart, it's quite noisy because we have been in this sideways territory, but it's even bearish in the days ahead. So we expect oil not to have a great week. Here we see the 1 minute chart. These are remember, this chart is very, very short term. We do have an upside target of 72 on WTI, but we have 3 downside targets, 69.20, 69.80, all activated. We did make the 69.80 target, so that does demonstrate that these targets are being fulfilled. 65.80 is the new downside target, and that would be activated with a new low about below 69. And we do see that if we get to that 65 target, then oil longer term is looking at the lows we saw last year. And then nat gas, you remember we were quite bullish on nat gas. We said it had a target of 5. It did jump last week, so nat gas is really bucking the trend there. And if we look at the 60-minute chart, this is the one to watch. Really the sort of 44.6 level is quite key on the cloud, but really we're in a trend now on the shorter term on nat gas. So nat gas, US nat gas, is looking quite strong. We've got an upside target of 49.30. We did sort of nearly get to our 5 target last week. We do now have some counter trend targets coming in. 46.80 as a cluster. We've got 2 targets pointing to that off different selling thrusts, so we wouldn't be surprised to see 468 coming in on nat gas, so we might see a little bit of a setback. And remember, we're talking about European gas. This is MBP. This is the winter 10 contract. We looked at this chart last week and it was too hard to call which way it would go. The normal clue is that the way into the pattern kind of governs the way out, so we wouldn't be surprised to see a break to the upside. And we have seen that, and the correlation between UK MBP and US nat gas is now very high, so that move in the US market is having an impact on the European market. And then if we look at the prompt market, much more volatile, of course. I've got both the day ahead and the within day contracts here, almost track each other. And what we see is that we've got this real sort of congestion going on this week. Will we break higher? Will we break lower? Too hard to call, but we do see quite a bit of upside. And of course, one place you'd go straight away when you're looking at this market is to the point and figure charts. And this just highlights the fact that we're in this sort of range and we've got to break either direction to fulfill the targets. We have a downside target of 34.75 on the day ahead contract. We have an upside target of 44.45 and 40.80. So, and these upside targets are, one's activated, one's not. So it could go either way. It's a very volatile contract to work out, but we are seeing that there is probably more chance of it going up than down. So quite an interesting week. That's all for this week. Until next week, happy charting. See you then.